Today, we'd like to welcome Ruth Irwin with On the Money to talk to us about financial statements. They really aren't as scary as you think. Why are all three important for business owners to know and understand?
They're all tied together. You can't do one without the other. It's like, wearing a shoe without the sock, or they're just all tied together, and there's pieces of each that reflect on the other one as well. Helen, do you want to jump in?
Yeah, and that's a good point because they are all tied together. And as Ruth had said, your cash flow is probably the most important statement because it does tell you the overall health and how your money does flow through your business. And what this slide says, there are things that are on your balance sheet that are cash out of your company that don't flow through your income statement. And a lot of times owners don't think about that. They don't think about the draws that they take out of the company, loan payments that come out of the company. Those never hit your income statement, and those can be very large amounts. So you have to stop and think about those.
Yeah, and what often happens, and it's why we have this statement at the bottom, is we get questions regularly about, okay, my CPA prepared my taxes. It says I made a profit. Why don't I have any money? Where is it? And that's where you have to go over to that balance sheet and look at the detail on it. And like Helen said, you're spending money that's reflecting on the balance sheet that isn't going to show up on that income statement. So the reason they don't have the money in the bank but showing up on their profit and loss statement is because they don't have it in the bank because they've spent it on other things. It could be a loan, paying off their credit cards could be a piece of it as well.